Account receivables. Account receivables are key element with respect to forecast. So they need to be forecasted. How do I forecast it? I will open another sheet with the name of balance sheet notes to forecast it. Obviously, I cannot do calculations here, so I will make another sheet. So I have balance sheet. How do we forecast account receivable? So remember, for forecasting accounting receivables, you need to know receivable days or debtor days. Based on the debtor days, you forecast future account receivable. Now the question is, what are debtor days? So what are debtor days? Simply your receivable. Sorry, yes. What are debtor days? Number of days in which you are recovering your amount, or your debtors are paying you the money or receivable. So you have revenues, you have already forecasted revenues. They are simply coming in from forecast. So this is your revenue forecast, right? Any problem so far? So this is your revenue forecast. In second row, you put an account receivable. So for first 2 years, you already have account receivable. Why? Because these are past years, 14 and 15. So you have account receivable from here. You have account receivable from here. Now next is debtor days. So how do you forecast debtor days? Yes. So you take your receivable and you divide it by revenue. When you divide receivable by revenue, you get receivable turnover, right? So if you divide receivable by revenue, account receivable by revenue, it will give you your receivable turnover. This is receivable turnover, average receivable or receivable turnover. Then when you multiply it by 365, it gives you the days in which you are recovering these receivables. So you took your receivables, which is this number, you divided it by revenue, and then you multiply it by number of days, 365. So again, number of days is an assumption, so I have put it in assumptions sheet. If I go to assumptions sheet, in other assumptions, I had so far made I had earlier made macroeconomic assumptions. Now I have added another assumption, which is other assumption. The number of days, 365. So I go again to balance sheet notes. So this is how I calculate debtor days. Any confusion so far? So this is for 15, this is for 16. These are the actuals which I have calculated. Now I can forecast future based on that. So either I can take average or I can take the most recent one. So I am here taking most recent one, assuming that my trade terms with the customers will remain be the same. So customer will continue to pay me in the time that they are paying me in. Any problem so far? So this is debtor days. Once I have forecasted debtor days, based on this debtor days forecast and based on this revenue forecast, I have revenue forecast, I have debtor days forecast. Based on these two forecasts, I can forecast account receivable. How? Account receivable is equal to these are days, is equal to days multiplied by revenue divided by 365. So I have the revenue, I have the days, I have the 365 days number. I can simply put the formula here and forecast future account receivable. So I take number of days divided by the 365 and then multiply it by sales. It gives me the account receivables for future. Any confusion so far? So you can simply forecast account receivable based on days assumption. Now if you change this days assumption, then your overall forecast will change. And you can again put this in assumptions sheet as well. So you can make another column, another segment of balance sheet assumptions, and you can put these values there and link it from there, so that if you change it in assumption, it gets changed here. Any problem so far till here?